So forms, 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 forms. How many times in a week, month, year do we fill out forms at our doctor's office, for credit cards, for loans, for our kids in school, for the government? Well, I'm going to focus on the government forms, and specifically if you're going to apply for a job and they give you the form W-4 to fill out. So I am going to show you, and now I am not a fan of the complicated wording on these forms, and I'm going to say to you, to a person, I've never met anybody who actually reads the entire form. So even though it's got a lot of information on it, it's not something that people actually spend that much time reading. The point to the W-4 is to prepare the HR department or your employer, small company, large company, to deduct the proper taxes from your check once you're paid. Now, the IRS, believe it or not, has a really good calculator for this. And I suggest that before you sit down with your form W-4, you go to irs.gov, and go to their calculator, their income calculator, and calculate what you should be taking from your check. Remember, they're not in charge of your check, you are. And you're the one that knows your situation the best. So if we go into form W-4, what they're asking you to do is tell them how many deductions you have or how many people you can claim. So you look at this and it says personal allowances worksheet. Enter one for yourself. Of course, if you can take yourself as a dependent and your parents aren't taking you. The whole point of that is the IRS does not allow you to take a deduction for yourself if you're 24 and living at home and your parents are still taking you. That would give you a double deduction, and the government would not be for that. So if you're 28 getting a job, nobody takes you on their tax return, you enter 1 on line A. And then if you go to line B, it says if you're single and only have one job, if you're married, have only one job, or your spouse doesn't work, or your wages from a second job, or your spouse's wages are under $1,500. You enter 1. Then on C, you can enter your spouse. And then they want you to add your children. So the idea is that if you're married with a wife and 2 children, you can take yourself, your wife, and your 2 children as a deduction. And then they'll remove or not remove tax based on those things. Then they ask you to say, are you the head of household? What head of household usually means is there's one parent in the family with several dependents, but not 2 working adults. Oftentimes it can be a mom, her elderly mom, and 2 kids. It can be a combination of many things, but head of household means that there are not 2 spouses in the house. That's usually what it means. So you go through and you fill that out, and it doesn't have to be perfect. It needs to be close, and there are guidelines for it. But here's what you have to understand: the less deductions you take or dependents you take, the more the government's going to take from your check. So a lot of people I know who are single, give you a scenario. You're 31, single, no children, no spouse, and you put single 1. They will withhold a little less tax because you said single 1. If you say single 0, they're going to say withhold at the highest amount. And of course, what you make plays into this. If you make $48,000 a year, and by the way, that's successful, or you make $98,000 a year, you need to do a tax calculator. In the old days we had, and I think I mentioned it in another form, in the old days they had this huge pamphlet that would tell you if you're single 1 and you make X to X and do this and do that. It's awfully complicated. But now that they have a calculator right there where you can put in your scenario, that worked so much better. Okay, so then the next part of the W-4 form. Your name and middle initial, your last name, your social security number, your home address, single, married. And you'll see it says married, but withhold at a higher single rate. In other words, if you're married and you guys make a lot of money, you might want to withhold more tax so you don't owe at the end. And understand when I say don't owe at the end, I mean don't owe thousands and thousands. It's okay to owe under $1,000, or it's okay to get back less than $1,000. But the whole idea about the W-4 and filling it out correctly and the tax calculator is so the government doesn't owe you any money at the end of the year and you don't owe them any money. We're trying to make this neutral, where they withhold just enough based on your tax situation to not have money owed or owed back and forth. The other thing too is if you own a home and you have a lot of interest, that's almost like a dependent. So I knew in the past a lot of people that would say, well, I have my spouse, my 2 children, and a huge mortgage. And so they would take an extra deduction. They would take an extra deduction for that house. And someone would look at it and say, wait a minute, you're taking married 4, I only married 5? What does that mean? And you say, well, I have me, my spouse, my 2 kids, and a big mortgage. Or I have me and my spouse, our 2 kids, and our elderly grandmother or elderly parent living with us. And that parent, if they're elderly, does not file for taxes anymore, and you're taking 100% care of them, you can use them as a deduction. There's a lot of things people don't know about their taxes that you can do. See if you go down to the second page where it says Table 1, Table 2, and it says all these things. This is where everybody got very, very, very nervous. So I can't really say that you should use Table 1 and Table 2. I'd rather you go with the tax calculator. It's really better for you. I think that you can put in both your salaries and determine what's going on if you're a married couple, or put it in yourself. And they will ask some of the appropriate questions for you. But if you don't have the tax calculator in front of you and you look at the Table 1 and Table 2, that will give you an idea of what you need to withhold. And so much for the W-4. In fact, if you're in a bigger company, the HR director will help you. And attached to a W-4 now, and I'm going to get that form up later. It's called an I-9, and I think it's been reworked. So I'll make sure I do an I-9. That is where you'll put your date of birth, and you'll have to show identification to prove that you are legal to work in the United States. It's a pretty important form now that they didn't necessarily enforce before, but as an employer, you really need a W-4 and an I-9. And with the I-9, you need a driver's license, a passport, or some other identification that proves you are legal to work in the United States. So none of these forms are, even though they do irritate us, are as much to irritate us as they are to tell a story about ourselves. And these things really do go into your permanent record. They need to be filled out really smartly. And it's one of those places where emotionally we get all anxious and we start not to want to fill them out. But it's pretty crucial that you fill this form out correctly. So always ask for help, and ask for help from someone who really knows what they're doing. And go on, use your tax calculator, and make this form work for you. We are not on this planet to give the IRS more money, the government more money than they're supposed to have, and then hold on to it for a year for you. You need your money to work for you. So this W-4 is quite important.